Hello, everyone, and welcome to another Facebook Live about the world of finances. As we all know, tax season is upon us, and I wanted to ensure that our audience is prepared for the long road ahead. Before I did that, I would be remiss if I didn't say Happy Black History Month. I am so excited to be presenting this during that month. I stand on the shoulders of some great giants, as do a lot of us. So, thank you so much, everyone, for being here. So, today we have Attiyya Ingram. Again, she is the military money specialist, returning to our tax tips discussion. Hey, Atia.
Hey, how are you? Good to see you.
I'm doing well. She's going
Good.
to walk us through some of the need to know things about this tax season. And this time, Atia and I are joined by Sherri Sales, who will be providing some information and resources from the IRS. Hello, Sherri.
Hi, how are you?
Doing
Thanks for
well.
inviting me.
You're very welcome. And last but not least, my fellow deployed fellow, Kiana Adner. She is sponsored by USAA, and she is located in Texas. So today we are going to provide some resources and tips, just like we always do. And we will also put a focus on transitioning and retired military family members as they face some unique challenges when it comes to taxes. So before we get started, I definitely want to reintroduce our panel and give some information about them. So again, we have Attiyya Ingram. She is an active duty Marine Corps spouse, and she is currently stationed in Virginia. She currently works as a government contractor and provides financial counseling and education to members of our military and their families. She is also the author of the Mil Spouse Guide to Using the Military Spouse Residency Relief Acts. I hope you downloaded that last time, but if not, download it today. And she is a professional income tax preparer. In addition, she has her own business, Ingram Finances Management LLC, which was started in 2011. Next, Sherri Sales is a public affairs specialist with the Tax Outreach Partnership and Education Branch of the IRS. And Sherri has worked at the IRS for 27 years. Wow, Sherri. Her prior position with the IRS was a revenue agent for 19 years. And again, last but not least, my fellow deployed fellow Kiana Abner, she is a retired U.S. Navy spouse, and she is a Blue Star mom as well to a U.S. Navy veteran. She serves as the National Chapter Deployed Fellow at Blue Star Families. She has served in various roles over the past 2 decades to help strengthen our nation's military families and communities. And again, my name is Brittany Alatone. I am the JP Morgan Chase Deployed Fellow, and I am located in San Diego, and I help spread information about finances to our Blue Star family audience. So let's get started. Attiyya, thank you so much for joining me once again, and Sherri and Kiana, thanks again for joining today. I wanted to start with this question. So, what are some military tax benefits that our audience may or may not be aware of but need to know about?
One of the best things that I think kind of held on after the tax law changes in 2018 was our ability to deduct or write off our moving expenses. So, of course, these would be the expenses that we're not reimbursed for. So, for a lot of us, especially when you're going OCONUS, overseas moves or Hawaii, you got to pay for your own car to be shipped. Maybe you're paying for a pet to be shipped. So, just make sure, you keep those receipts because that's a deduction that's unique just to our community.
And Sherri?
Yeah, another benefit would be like a sale of your principal residence. A taxpayer on a qualified official extended duty in the U.S. Armed Services or the Foreign Service may suspend the 5-year test period for ownership and use for up to 10 years during any period the service member or spouse served on a qualified official extended duty as a member of the armed forces. Service members are on a qualified official extended duty if more than 90 days or for an indefinite period, they are at a duty station at least 50 miles from their main home or residing in government quarters under government orders. This election applies to only one property at a time.
Awesome. Thank you both for those amazing benefits that we get to enjoy as military families. So, I wanted to read a little statistic here, and this is coming from the IRS. So, according to the IRS, almost half of unpaid taxes owed by current and retired federal employees are owed by retired military. This is mostly because retirees do not have a complete understanding of their tax obligation. Ouch. That's a lie. I was not aware of that. And so that's why we're doing this Facebook Live today. So I wanted, Sherri, could you kind of explain to us why is this the case when it comes to retired military members?
Okay, so many retired military members are surprised at the amount of federal income tax they owe when they file their first return after retiring from the military. And they might ask, why is that? Well, I mean, the main reason is because when they retire, they move into a civilian workforce. They're moving into a higher tax bracket as a result of having income from two sources. It'd be their military retirement income, and then you're adding your civilian employment income for that first year. And then the second reason is not having enough tax withheld. And another reason is if the spouse is working, then that's going to add additional income, which could actually push you even into a higher tax bracket.
And I'm sorry, were you all able to hear her last sentence?
I missed that last
No.
Okay, could you repeat your last sentence for us, Sherri?
Sure. When they move into the higher tax bracket as a result of having income from two sources, and the two sources would be the year they retire, they have the military income from that year, they have their retirement, and then you add the civilian employment income. So all the incomes combined are actually pushing them into a higher tax bracket. And then another reason would be not having enough tax withheld. And if your spouse is working, you're actually going to be adding more income, which pushes you into a higher tax bracket. So if you don't do planning for the additional income, you're actually going to be under withheld on your federal taxes.
Great information. We're definitely going to be talking about that a little bit more later in the discussion as well. So Attiyya, coming over to you, is there anything that you would want to add from your experience working with retirees? Are there any common mistakes or misconceptions that you have seen?
I think one of the best things retirees and their families can do is just really put effort into staying organized, keeping up with the paperwork. There's a lot going on for our families during that transition phase. Often entails a PCS, buying a house, maybe kids are going off to college. So it's just a full load on our plate. So I think we just need to be organized. So when we hear about these benefits, and a lot of them we'll talk about today, we know where to get that paperwork so that we can apply right away, so we don't miss money. But a lot of times, if it takes you 2 or 3 months to find it, or you have to contact the VA or contact DFAS, to get a duplicate of something, you're just delaying the process and missing out on that money.
Yes, because we all know how long the government takes.
Right.
Definitely. Okay, so now let's talk about, to both of you again, what are some of your top 5 need-to-know tips and strategies for filing income tax returns for families that have transitioned from active duty? Say they transitioned last summer and they've been working in the civilian sector since that time. So I'll start with you, Sherri. What are your top 5 things that that families need to know?
Well, first of all, prior to leaving the military, they should complete a Form W-4P, a withholding certificate for pension and annuity payments. This is going to tell the Defense Finance and Accounting Service how much tax they need to withhold from each check. And then when starting a new civilian job outside of the military, your new employer is required to ask you to complete a W-4. This is going to determine how much you have taken out for federal withholding. And in addition to that, I recommend that they seek the advice from their new job's HR department, Human Resources, because they will help them fill out that form correctly to make sure the correct tax is withheld. Third, I would suggest that they carefully read line by line the instructions of the W-4. There are calculations and items that can be confusing, but will also help to prepare them to have that form filled out correctly and have the correct tax withheld. If you and your spouse are both working, all incomes need to be considered when having enough federal taxes withheld. The IRS has an online tool to help you determine the correct withholding. It is called a Tax Withholding Estimator, and it performs a paycheck checkup. This will help you make sure that you have the right amount of tax withheld from your paycheck. And just as a side note, if you were to go to the IRS's website, it's www.irs.gov /individuals/tax-withholding-estimator. This is how you can access that tool to make sure that you're having the right amount of tax withheld. And it also considers a family's income. So it would include your spouse if you're working more than one job. It includes your whole financial picture. And the last bit of advice that I have would be to avoid penalties for the upcoming tax season. You want to do a review of withholding in December of the current year. If you find you're short on the amount of tax that you have withheld, you should make an estimated federal tax payment by January 15th of the following year to avoid penalties for not having enough tax withheld. And for that, you can go to the irs.gov/payments, or you could go to the IRS's mobile app, IRS to Go, to make payments as well.
Thank you so much, Sherri. That was a lot. I know sometimes, even for me filing the W-4, the information can be kind of confusing. So having those calculators and having those forms is really important. I want to let the audience know we will be providing links. If they're not in here today, we will definitely have links up during the replay or on the website, the financial resources landing page. So Attiyya, Sherri covered a lot again with those forms, just like last time. So is there anything that you would like to add in addition to what she said?
Just a few things. Of course, what she mentioned with the withholdings, that's one of the biggest issues. So I was so glad to hear that, Sherri. And I would just add to that for our vets, as you're going through your transition classes, you can attend more than once. Keep that in mind. So as you are making that transition, and if you're married, invite your spouse to attend the class with you. So you can do that finance section more than one time, the VA section more than one time, especially now that a lot of the classes are being held virtually due to COVID. Call the installation maybe in a different location from where you are to see if they have space to fit you in the class virtually. The more times you hear it, hear what the information, different instructors are going to focus on different areas, and you're going to benefit the more you attend that class. So that's a big thing there. Seek help once you transition out. There are lots of great free resources out there for our veteran community, so you don't have to pay for services. We all know Military One Source, is a great go-to for tax help for active duty and veterans. And the VA also has information, free tax support for our vets. So again, there's resources out there you can take advantage of. And then I would also say really start to inquire on your way into retirement as you're transitioning about what benefits you have on the state and local level, because a lot of things are missed. Obviously, with there being 50 states, everybody has different rules about, how they treat their veterans, what's taxable, what's not, and what your benefits are. So maybe what was a benefit for you on active duty may not be in retirement and vice versa. So start to, ask around. Of course, Google is our friend, right? You can Google and start to look at, just put in military or veteran benefits in the state that you're transitioning to. So again, you can have those documents ready to take advantage of any benefits that are available to you.
Awesome. I wanted to go back to something you said, Attiyya, about the classes. I didn't know you could take them more than once. So that's great information. And also, if you want to go get it from a different duty station than where you are, that's also a great idea. I wanted to ask, though, how soon in advance to retirement do you recommend that people take these courses?
Usually people start to take the class within that 12-month window. I mean, it can be even, I think, back to 18 months. Every base and every branch may have different regulations. Again, with COVID and a lot more being done virtually, it has kind of opened up the rules because it's not we're not limited by classroom size and how many people can fit in. But pre-COVID, of course, there were limits. So some bases were limited to 12 months. Before your transition. But again, like this is a great opportunity with even, what the discussion we're having today, where things are virtual, you can hop on in different locations. I personally have been, my husband's not even ready to retire yet. And I kind of snuck into a VA class because I was just so curious, like, what are they talking about? And I sat in a couple, and the information was so different, all good information and all accurate. But again, the instructors are going to focus on the things that they kind of, think are more important. And a lot of the discussion is based on the questions from that specific audience. So as the audience is changing every class, the focus is going to change just a bit.
That is such a great point. So definitely everyone take advantage of that and sneak into those courses, everyone.
Yeah. Well, no, sign up. Do the right
That's right. Sign up, but then sneak your way in if you're not ready for retirement. All right. So now I'm going to give a certain scenario. Some of these things you all have pretty much answered, but I just want us to think about just a scenario. So let's say a service member retired last June, right? While he or she was stationed in San Diego. And then they happen to move to the National Capital Region to live and work in the civilian sector as a retiree with their family. What are some things that this retiree may need to consider when it comes to taxes, such as federal tax withholding, which we've mentioned a lot in this specific scenario? And anyone can take this one, by the way.
Well, basically, I mean, they should consider what we just talked about. They're moving to a new area. They want to make sure that they've considered the withholding. I mean, I can't stress that enough. I know Attiyya mentioned, being organized with your records. But you want to make sure that going into your move, going into your retirement, that you are prepared for that, and you want to take the classes that are necessary. And that's something even that the IRS where I work promotes to their employees, is to take all the classes to prepare yourself. And it's okay to take them before you retire. And if you're going to be retiring in 5 years, start thinking about that now, what you need to do, what you need to start saving to make sure you're prepared for that day when you actually make that transition. But definitely do the research and definitely take advantage of all the tools that are out there, and any organization that's willing to help you and guide you through that, you should take advantage of that by all means.
Awesome. Thank you so much. And I like how you said preparing for it, like even 5 years in advance. That's hugely important. Anything to add, Attiyya, with this specific scenario at all?
Yeah, just a reminder for our vets that, once you move to the new state and you're no longer active duty, they will welcome you as a resident. So now you might be subject to taxes in that state. In your scenario, Brittany, moving from California, maybe on your LES, you've been in Texas your whole active duty career and haven't had to pay state taxes as you PCSed all over the globe. But now you get a great job in the NCR, right? And here you come, and now you're a Virginia resident, or maybe you go to Maryland, who knows? But they're gonna get a nice little chunk out of your civilian pay, welcome to, and your pension, because Virginia, as an example that you provided, they tax military pension. So you just have to, again, really prepare and run those analyses. That's why those classes are so great that are offered on our basis, because they kind of walk you through all of those different scenarios based on where you plan to go, because again, all of our situations are so unique.
Definitely. Thank you for bringing that up. And I think it's important to note to maybe look into like which states are military friendly when you retire. That's usually important as well, especially thinking about the National Capital Region, the big chunk that they're going to take out of their check, specifically Virginia.
Right.
All right. So, but what if a retiree needs to change their retirement pay withholdings? Where would they go to make those changes? Like, what if there are mistakes or different things like that? I want to make sure that we mention that. Where are some things they would go specifically, Sherri?
Well, some of the items that we show is they can go to, you can call your retiree pay customer service number at the Defense Finance and Accounting Service, the DFAS, and that phone number is 888-332-7411. They can also make changes online via the DFAS's MyPay secure webpage-based management system.
Thank you so much for laying that out. I just wanted everyone to have that information on hand. So now I'd like to ask you both, before we get to Kiana, For our retired families, can you explain how the tax liability works for the retirement pension and the reasons it may or may not be taxed?
Yeah, I'll be happy to take that one. So for your pension, you're going to get a 1099-R for retirement. That's going to report the taxable portion of that pension. Any disability award that you may have from the VA will not be reported on that 1099-R. So you don't have to worry about it being there. I get that asked a lot. People just want to make sure, that their tax-free portion is not on that 1099. So again, they usually do a very good job of only reporting what is taxable to the federal government on that 1099. And then you may get a statement from the VA showing what was non-taxable, but you don't need to report that on your income taxes at all. And then, of course, for every state, like we mentioned before, they're going to have different rules about, whether it's taxable. Maybe you get a certain dollar amount off, or, it's going to vary state by state. So you just have to do your research. But again, like Sherri mentioned, with that, when you're filling out your W-4P for your pension, you really need to look at what your tax bracket is, between your military pension, if you have a civilian job, maybe a spouse also works, and you should be able to go to your tax return for the year prior to pull up your tax bracket. Just kind of look at what your AGI is, that adjusted gross income, that magic number we always, hear about reference, to figure out where you are. And again, you can just Google, what are the 2022 tax brackets? Because that's the year we're in now and we're preparing for, to see where you fall. Oftentimes I see DFAS will just default and withhold 10%. And very few taxpayers are in the 10% bracket once you add in all those different streams of income, and then you end up owing. So just stuff you really want to look at.
Very important. Did you have anything to add here, Sherri?
I think Attiyya pretty much covered it all. The only thing I would add is there is an IRS publication, 525. It's for taxable and non-taxable income. And if anybody ever had any questions about what is taxable and not taxable, they can look at that too.
Awesome. So since you went there, what are other types of incomes that are non-taxable? What are some examples?
Well, we are just coming out of the pandemic, so all of your economic impact payments are not taxable, the stimulus payments. Disability pay for certain military and government-related incidences are not taxable. Your workers' compensation is not taxable. Your veterans' benefits is not taxable. And any cash rebates you get from a dealer or manufacturer for an item that you've purchased would also not be taxable.
Awesome. Okay, so since we're talking about disability pay, so some of our service members receive a disability rating, some of them do not. And we know that that is non-taxable, correct?
Yes.
Correct.
Okay, can you kind of explain, both of you, anyone can take this, why or why not? Why is that not taxable for our audience?
Well, I'll tell you my personal take on it. I'm married to a Marine, and I look at it as this is the government's thank you, final thank you note, to say, we know, the time you spent on active duty was difficult on your body, and so this is their way of compensating our service members and saying, because again, that's what that VA disability rating is based on, right? That process you go through with medical to determine the percentage. Oh, we had this knee surgery back, at this time, maybe my elbow this time, all of these different things. And the government is acknowledging that, this lifestyle, as we know, is not for the weary, right? And so because of that, they are compensating us financially and saying, here's the least we can do. And again, that rating has implications beyond just your tax return, which many of us know about, maybe college benefits for dependents, or again, state and local perks. And even sometimes having a 0% disability rating can open up doors for benefits for other things, outside of tax season. So just going through that VA process to get a disability rating, whatever that number is, of course, 100 means exactly what it sounds like. 100% is non-taxable, and you're getting that payment from the VA, which is great. And I see more and more people. I think it's also important to know you can have a 100% rating from the VA and still go on to have a great civilian job, post-military, and it's not going to impact your career moving forward.
Awesome. That's great things to know. And I didn't know that the 0% rating, you can still get some type of benefits. I had no idea about that. Is there somewhere where people can go to get more information about that, or is it just going through the VA process?
Just the
Where they'll
VA
share that information?
process. Yeah, the VA process itself. And again, those transition classes that are so important. And we just, need to stress that our service members attend that because they're going to go over all of the benefits for what it is. A lot of them could be whether or not you pay a VA funding fee on a home purchase, as a veteran, right? You don't need to have 100% for that benefit. So just different things, they're going to lay it out. And the great thing about it is it'll be specific to your individual situation. And that's what makes it tough because, when we look on social media and everybody's trying to read, different documents, you may be hearing somebody's situation and not realizing, well, they have 100%, or they live in Texas, right, Kiana? Like all of these different things, and you assume it applies to you, but it may not. So you gotta, talk to experts. Again, contact the VA directly for questions related to your situation.
Awesome. And that's why we have you guys here to give us more information because you two are definitely experts. So now I'm going to take a back seat here, and now I'm going to hand it over to Kiana Abner, again, our USAA National Chapter Deployed Fellow. She is based in San Antonio, and she and her husband are now a retired military family. So I want her to come in and ask some questions because she is almost like an expert in the situation too. And I know it feels amazing, Kiana, that your husband is retired. I cannot wait for that moment.
Thank you so much, Brittany, and thank you all for being here to answer our questions. This is amazing. And Brittany, yes, it's definitely a transition. I would definitely tell families to, just like Attiyya said, don't look at one family situation and think, okay, that might be what ours looks like. We had no idea what retirement would look like for our family, and we've had a lot of those challenges in not really understanding what was ahead of us. So I do appreciate this. This has given me some more tools for my toolbox. I wish I had done what you mentioned earlier, jumping into some of those classes multiple times. But that's what makes transition a challenge, but also a good opportunity for us to learn and come to organizations like the IRS and AFC to get clarity on what we need to do. So for our family particularly, I think one of our biggest challenges was really not expecting there to be a gap between the month-to-month paycheck and then receiving the pension. There was a long gap. My husband actually waited about 9 months to receive his disability and then 2 months for the regular pension. So I wanted to ask a question about unemployment because I myself had to go through that process of filing for unemployment, and they just give you like that basic, like Sherri mentioned, that basic 10% tax. So how do families go about making sure that they're contributing through the unemployment process? Because there wasn't really a way for me to go in and give additional contributions or maybe set like we do with our W-4 forms. So what would you say to those families who may be getting the retirement, or I'm sorry, the unemployment compensation, and how would they go about making sure that they don't get that surprise at the end of the tax season?
Well, unemployment income is an income and it is taxable. And I know with the pandemic, a lot of people were receiving larger than normal unemployment checks, and taxes are not taken out. What I would recommend is that do the quarterly tax payments, 4 quarters a year, January, April, July, and January or October, then January the following year. By making those quarterly payments, so set aside, I would say 10% of what you're receiving and then make those payments. At least you're prepared to have some federal taxes taken out of your unemployment checks.
Oh, I think we lost Sherri for a little bit.
Anything to add, Attiyya?
Yeah, I would just add, Kiana, I think that's a great point that you brought up, that there is that lag time for a lot of our families during the transition, and why it's so important in those years leading up as best you can to save money, right? So a lot of us, those 2, 3 years pre-retirement, when you're getting those large refunds and you're able to save maybe a little more, then that is a great time. Just like we tell, as a financial counselor, we advise, people to have that 6 to 9 month emergency fund. And in your scenario, Kiana, that's exactly why, right? Because it took 9 months to get the money you rated and be able to, have a normal income stream compared to what you were used to. So that is so important, again, for us to project and hear stories like yours. So thanks for sharing that, Kiana. And we just as that reminder of why it's so important to have that emergency fund as best we can. Life happens, so all we can do is our best. But at least we won't be as shocked, when and if it does happen. Some people have a seamless transition as far as the money goes, but others again can take as long as 9 months or more.
Yes, thank you so much. And luckily we did have that cushion, but I know for myself personally, I have had to file unemployment, and I just noticed that there was no real way to track that.
Right.
So I just wanted to make sure that families who are going through that process would at least have that. Another challenge that I would like to ask, or share and also ask a question about, is those who are homeowners when they're separating from service. So one of the things that we learned on active duty was that there was a tax incentive for the homeowner for active duty families. How does that change in retirement, and what should families expect to provide as far as documentation to their local tax assessors?
Well, on the federal level, the benefit is, pretty much identical as far as, your ability to deduct your mortgage interest, your real estate taxes, things like that. But however, on the state and maybe local level, you may be entitled to some benefits that you weren't entitled to on active duty. Like if you have that 100%, disability rating, maybe you don't have to pay real estate taxes, in your location, which can be huge. But keep in mind, right, no longer paying real estate taxes means that you have less tax to deduct, as a deduction on your tax return. So, I mean, which is not probably a bad thing. It's still more money in your pocket. I would never say, spend $1 somewhere just so you can save 25 cents. Like, you don't want to do that. But again, you just want to make sure you're looking at what your state can provide. But on the federal level, there's not much difference as far as like the transitions from active duty to veteran status when it comes to home ownership.
And is there anything you would like to add here, Sherri?
I agree with everything Attiyya said as far as the home ownership. Normally, if you're itemizing on your Schedule A, you'd get your mortgage interest and your property taxes. The property tax limit for federal purposes is up to $10,000, combined with your state income tax too.
Awesome. Thank you so much. Kiana, did you have more that you wanted to add here?
No, I appreciate the answers. Thank you so much. And I hope it helps somebody out there.
Thank you. So before we wrap up, there is a question here, and I want to thank Maggie Man Yi Chan Roper for listening. Thank you so much. And her question is, what was the last benefit about property during an extended assignment / tour / deployment?
I think Maggie was asking about the what we call the stop the clock provision for capital gains and the ability to treat your home as a primary residence. So under normal IRS rules, you have to have lived in the home 2 out of the last 5 years to treat it as your personal residence and avoid paying capital gains taxes on any profits you made. So again, profit is what you sold it for minus what you purchased it for, and that's your profit, right? And so we want that to be a big number in between those two things and walk away with that. And you don't have to do, anything with that money. Like you don't have to reinvest it into a home, like all of these great things with, the IRS changed the rules years ago. So you literally can walk away with that money. If you had to turn your home into a rental, or you chose to turn it into a rental because you received orders, and you had to leave, you can basically rent your home for 10 years. What they call it stop the clock. So the clock stops for up to 10 years while you're on active duty. And you can continue renting the home and still treat it as a primary residence. So you really have to just watch the timing of it. You may not have to pay capital gains on the profit from sale because you can treat it as a primary residence. However, you do have to pay depreciation recapture taxes, which can be pretty hefty if in fact you did rent it for 10 years. So, when you get to that level, that's where we recommend you talk to a professional. That's not really something, your software that you typically may have used in the past can calculate and do those exemptions and exceptions and understand the rules and the nuances. So that's when you probably want to reach out. Even Military One Source, they would know that it's there as well.
Thank you so much for answering that. Attiyya, is there anything you would want to add, Sherri?
No, she covered it perfectly.
Thanks, Sherri. They're coming from the IRS, man.
No, I have my little note here. No, I mean, you did a great job.
I'm done for the day now.
A true tax professional.
See, as I told you all last time, I was like, hire Attiyya. I'm trying to tell you all, she would get you right. But thank you so much, Maggie. If that didn't answer your question, or if you wanted to ask something else, please definitely chime in and ask. But she did bring up, sorry, y'all, I went on mute. She did bring up the deployment, and that was something that I was not going to ask about. But since she did ask about or mention deployments, Sherri, could you tell us some information about being in the combat zone and how the IRS can exclude some of your income from taxation?
Yeah. Let's see here. I have notes.
That's perfectly fine. And I know I put you on the spot there. So
no, you're fine. You're fine. Let's see here. Typically, income when you're in a combat zone is not taxable. There are areas which areas are combat zones. So there is a website you can go to figure out if you're in a combat zone. Let's see here. See questions and answers on more combat zone provisions for more information about combat pay. Other non-taxable items would be like your basic allowance for housing, the BAH. And another non-taxable item would be the basic allowance of subsistence, the BAS. Let's see here. So they can, okay, so if you go to Pub 590, actually that's the earned income tax credit. Let's see here.
While Sherri's looking for that, I'll add for most.
Okay.
Thank you, Attiyya.
Okay, I'll just add that for most of us, our finance section does a pretty good job of indicating in our pay, when we enter a tax-free zone, our service member enters a tax-free zone, and you'll see that annotated on your W-2 in box 12 as a code Q. So when you're looking, at your W-2 and you're trying to, again, ensure all of your taxable income is, reported properly and is not showing in box 1, because remember, box 1 of the W-2 is taxable wages. And then you should see the portion of your tax-free combat pay down in box 12, code Q.
Mm-hmm. Thank you so much for that information. And Sherri,
so basically what I had on the combat zone. So if you're in a combat zone, So this is one of the military benefits. So extensions to file returns or pay taxes are granted to service members who serve in a combat zone. Or to have qualifying service outside of a combat zone, you will also apply to the military members serving in contingency operations outside the United States as designated by the Secretary of Defense. So if you are in a designated combat zone, your income is not taxable, but there's also benefits as far as extensions to file your returns. There's extensions to actually pay your taxes while you're in a combat zone.
Awesome. Thank you so much, Sherri. And thank you so much, Attiyya, for answering those questions, especially when it comes to combat zones and deployment. And again, there is a link that will be provided that lets you know, like, if you're that will show you how, if you're eligible and what areas are actually designated as combat zones through the IRS. So thank you both. So I wanted to wrap things up here, and I wanted to ask both of you, and Kiana, you can ask something here too as well. Do you have any more tax tips you would like to provide to our audience? Is there anything else that we need to know, just to make our audience aware of any and everything that we may have missed or didn't cover today?
I would say for me, we covered, pretty much the main things during this discussion, which has been great and such a great opportunity to have Sherri direct from the IRS joining us. And the biggest thing, again, I'm seeing this year so far is people not having their correct stimulus payment amounts to put on that tax return. And I'm telling you, you're going to delay your refund. So, it's really worth it for you guys to take, 5 or 10 minutes, log on to the IRS website, confirm how much they are showing, you should have received. If you did not receive the amount that they show, because it can happen, maybe they mailed it, UPCS, you never got the check in the mail, those things happen, then there is a process to trace that money, but you still need to report what the IRS is showing you received on your tax return. And that's going to save a lot of stress, trust me, on the back end, because it will delay your refund significantly. And I know the IRS is doing their best to catch up, with COVID, and we don't want to, be in that pile of the, something's not right here. Let's take a couple more months to figure it out. So take that few minutes, get those numbers right for your IEP, your stimulus, and for your advanced child tax credit. And again, the IEP money was not taxable to you, but it has to be reported really just so the IRS can be sure you're not owed additional money. So it's not hurting you to report that on your tax return. I think people are thinking like, oh no, that money's going to be taxable. I don't want to tell.
Yeah.
It's not. Yeah.
Definitely. Thank you so much. So we need to have our ducks in a row. We need to go to the IRS and make sure that we report exactly what we have been given, because we don't want to be delayed. We want our money and we want it now, right?
Yes. Start earning interest. Get that money and put it in the bank. Right? Start saving it for transition.
That's right. Exactly. Way to bring it back, Attiyya. Mm-hmm. All right, Sherri, do you have anything else you would want to add?
I want to add to what Attiyya said. She made a very good point about knowing what your stimulus payments were. And the IRS did send letters out to every individual that received a payment. If you've moved, you might not have received that letter. But if you did receive the letter, definitely include that if you have a prepared, preparing your taxes, make sure they have that letter to show how much you received. And if you're in a situation where you did not get the letter, you might have moved, you can go to irs.gov and you can create an online account, and they will give you a transcript of your account and it will tell you how much you received. So you shouldn't panic if you didn't get the letter. If you just go to the irs.gov, you can find the information out. So, which is a great tool. I know we talk about tools and helping us to be able to figure that out. I just wanted to talk a little bit about filing options for military families. Department of Defense's Mil Tax. This is a Department of Defense program that generally offers free return preparation, e-filing software for all military members and some veterans. It's free, and what's nice is there's no income limits. There's tax preparation, there's electronic filing software, and there's personalized support from tax consultants with the mil tax. Also, I want to add that the IRS also offers a free file online, and this is for single taxpayers with income of amounts of $73,000 or less, and that you would go to irs.gov/free file. If you meet the income limitation up to $73,000, it's free. There's no charge, and there's 8 different brands offered. You can choose the brand that best suits you, and some of these brands offer state software too. So be sure to check out all the different brands. And 2 of the brands are also offered in Spanish language. And another service that's available to military, along with the general public, is the Voluntary Income Tax Assistance. That would be irs.gov/VITA, VITA. And this is free tax help from the IRS certified tax preparers. It's available at most military installations. And it's a tool to help you. There is a tool that will help you find the nearest VITA location. There's trained VITA volunteers. They assist you with the and they're able to address your military-specific tax issues, such as filing deadlines when outside of the United States, combat zone tax benefits, and also the earned income tax credit guidelines. And to locate the nearest VITA or TCE tax counseling for the elderly site, you can go to the VITA locator tool, or you can call 800-906-9887. I know I've talked a little bit about this, and I just want to mention that the IRS does have a dedicated website for military. It's irs.gov/individuals/military. And I don't know if you can see the page right here. This is what the page will look like when you go to the military website, so the irs.gov. And then the other tool, and I call this a tool, but this is so valuable. I call this the Bible for anybody in the armed services, is our publication 3, the Armed Forces Tax Guide. And this is the current year, the tax year 2021, which is what you're currently filing right now. And it's a complete guide, 42 pages long, and it will answer a lot of the questions that we talked about today. It'll give live examples of specific situations. So if you are unsure of something that we didn't cover today, go to the irs.gov and look up publication 3, the Armed Forces Tax Guide, and that might be able to help you also. And that would be all the tips I have today.
Thank you so much. I really appreciate all of those tips. And again, we have links to those things that Sherri mentioned. And also Attiyya and I mentioned those resources last time as well. So definitely make sure you check out all of those resources, and definitely be on the lookout for IRS scams and fraud and things of that nature. I know that is rampant this year, just like every other year. So be on the lookout for that. I want to thank you, Sherri, for joining us from the IRS. I want to thank you, Attiyya, for coming as a mil spouse that has your own business. Thank you for all the information and being up to date with everything. You were just a wonderful wealth of information to both of you. I also want to thank you, Kiana, for being a part of this and being vulnerable and sharing the story about your family and their experiences with retirement. How that went for you all. Thank you for adding in your scenarios. And thank you, audience, for joining us today. This has just been a wonderful conversation. I'm so glad that we were able to provide this information specifically for our retirees and veterans. So I just want to thank each of you for listening. Please go back and listen to part 1, listen to part 2 over and over again. And please make sure that you do your due diligence and research. And visit Attiyya's website, download her book, visit the IRS websites. Thank you so much, everyone.
Thanks, Brittany. Thanks for the opportunity.